Welcome back. We could be less than 11 hours away from the first International Longshoremen's Association strike on the East Coast in nearly 50 years. Around 50,000 port workers are expected to strike across the East and Gulf Coast, shutting down 36 ports and halting billions of dollars in shipments. One of my next guests says the era of permanent volatility is upon us. For more on that and what the strike could mean for the U.S. economy, let's talk to Lisa DeNight. She's Newmark's Managing Director of National Industrial Research. And Steve Odland is CEO of the Conference Board and a CNBC contributor. Great to have you both here. Lisa, what are the implications and how long is this expected to last?
Well, thanks for having me on today. And I will say the top line takeaway here is duration amplifies impact. If this strike goes on for a couple days, the implications are rather short-lived, I'd say. If this drags on, it has cascading impacts throughout the global economy, not just the U.S. economy. So the unpredictability of this issue here is really in play, and it has the magnitude to really throw a giant wrench in global supply chains.
What is the duration? I haven't actually looked to see what people are saying about how long they expect it to last. And what to you would be the difference between a minor disruption and something more substantial?
A minor disruption of even a couple of days has really significant implications for certain industries, pharmaceuticals, auto manufacturing. But a couple days in net would not have terrible impacts or long-term impacts. If we look past a week or 2 weeks, that will require months of recovery.
Wow.
So there's a substantial difference every day that a potential strike goes on.
LG, Home Depot, Hyundai, Continental Tire, Steve, those are just some of the companies potentially who do the most business through these ports and could be most affected. How should we expect them to respond and deal with this?
Well, you've got people who have built inventories in anticipation of this, but there's only so much. And Lisa's right. I mean, any disruption, they're saying, every day is a week's recovery. But what happens then is the prices go up. And so you'd see big impact in inflation. And that would happen right away, irregardless of what happens to supply. And so that would be a ripple effect through the economy. Now, we're sitting here on the next Fed decision. If the Fed sees this and you've got layoffs going on, if you have plant shutdowns and so forth because you can't get parts. Remember, if you can't complete an item if you're missing one part out of thousands of parts. So it's, you're just throwing the whole supply chain into imbalance here. You see that. You see borrowing costs start to go back up. You see the Fed saying, hey, wait a minute. You got inflation going back up. I better pause on this. Then you see the net effect of the stock market reacting to all of that. So this could be, a really calamitous situation. But the problem is we're sitting here 1 month away from an election. The president has said that he's not going to invoke Taft-Hartley, which would give an 80-day period to resolve this thing. The two parties are way, way apart. The shippers are offering half of what the union is asking. So this is not close. This is not an 11th hour thing. We're far, far away. So this could be, up to a month. I mean, if you have a situation where the administration is not willing to get involved. Now, if I was the administration, I'd get right involved, try to help negotiate it. I understand the Taft-Hartley thing, but if they could negotiate a settlement, they can come out a hero. If they don't, you throw the nation into some level of economic chaos, going right into an important election.
And right as many people are saying, hey, the economy's actually in pretty good shape. So, Steve, your firm has some great numbers to put to this. You think every week it could cost the economy about $4 billion. These ports do about a quarter of U.S. international trade on the East Coast, including 87% of commodities, including oil and wheat, which I think is interesting. So, Lisa, if this does blow up in the next couple of weeks and become quite a nuisance, will the ramifications then last into the Christmas shopping season?
For sure, yes. Now, I will say that a lot of shippers saw this coming and have brought in goods ahead of time. There's been a lot of diversion to West Coast ports already. We've seen very strong import growth year to date. In fact, the third largest volumes of import growth year to date of any period in time. So I do see nice cushions in business inventories. That being said, there's only so much you can bring in ahead of time. And then when you talk about specific things like perishables, you really can't front load perishables. Bananas, for example, I was eating my morning banana thinking, wow, lots of bananas come in via East and Gulf Coast ports. You can't really front load bananas. You can't really pivot to air freight for bananas. So there are specific implications that come down even on an individual commodity level. Luckily, a lot of goods have been brought in ahead of time, especially if the duration is relatively short. We shouldn't see much of an impact to the holiday season.
Sure. Here I thought bananas would have been a West Coast import, so I need to go do some checks on the global supply chain and get up to speed there. Thank you both. Appreciate it. We'll, of course, see what happens tonight and then in the days and weeks to come if this does go forward, with the two sides being as far apart, Steve, as you mentioned that they are. Lisa and Steve, thank you. We appreciate your time.